What's up, you guys? Welcome back to the channel. Today's video is going to cover why both NIO stock as well as Lucid stock are continuing to pull back and why they've been having so many red days lately. So first we'll take a look at NIO, and then later on in the video I'll get into Lucid stock because there's actually some pretty big news and something that the CEO has done that scared a lot of investors and has caused a lot of people to sell out of their positions. But before we actually get into all that information, for those of you who are new here, my name is Evan and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, while you guys are down there, if you wouldn't mind hitting the like button, I would really appreciate it, and it lets me know that you guys enjoy these video updates every day. So again, I would really appreciate anybody who hits the like button. Now, taking a look at NIO stock first here, they're currently trading at 1632 as of right now, and they're down about 8.2% on the day. Now, when the market opened, NIO was at about 1825, and the previous close yesterday was at 1777. Now, they've actually pulled down below $17, and they're trading in the mid $16 range right now. And I think this could be scaring a lot of investors and a lot of people who've been holding their shares of NIO for quite a while. If somebody's been holding a big position of NIO and they see it continually going down, and they think it's going to continue going down even more, they might sell out of fear that the stock is going to continue plummeting. And I think that's what we're seeing right now because there's a lot of fear around NIO actually becoming delisted, and I think that's causing more and more people to sell out of their positions. Now, this isn't specific to only NIO. There's actually a lot of other Chinese stocks that there's been fear around them being delisted from US exchanges, but one of the bigger stocks, especially in the EV industry, is NIO stock. And this fear is coming after them listing their shares in Hong Kong on the Hong Kong Stock Exchange. Basically, what happened is that some Chinese-based companies have begun listing their shares on the Hong Kong Stock Exchange as the US Securities and Exchange Commission, or the SEC, begins taking a closer look at Chinese companies listed on the US stock exchanges. Now, the reason why this is concerning for some companies and for people who are invested in Chinese stocks is that under the Foreign Companies Accountable Act, which was passed 2 years ago, the SEC can delist a foreign company if they fail to provide audited financial records to the American regulators for 3 consecutive years. Now, there's actually a list of 5 Chinese companies that have failed to do so, and this news has sent many Chinese stocks plummeting, and this includes NIO. Now, NIO wasn't actually one of the companies on this list, but there currently isn't any information indicating if these shares are going to be delisted anytime soon. So any Chinese companies right now who are listing on the Hong Kong Stock Exchange are just taking precautionary measures by dual listing, and they're kind of creating a safety net to get more investors right now before they were to be delisted if that were to happen. Now, it seems unlikely since NIO wasn't actually on that list, but we also don't know exactly what could happen, especially seeing as though they're listing as a precautionary measure, and there is a company called Didi, which is basically the Uber of China, and they're going to be delisted from the New York Stock Exchange, and they're going to only be listed on Hong Kong Exchange. Now, I think that's where a lot of this fear and doubt is coming from because of Didi, and that's concerned a lot of investors who have bought Chinese stocks over the past few months. Ever since that news came out about Didi, this delisting fear has never really gone away. Anytime there's anything related to the delisting fear, it just increases concern among people who are invested in these stocks. Now, moving on to Lucid, and they're actually down as well, currently trading 4.7% in the red right now, and they're trading at $23.07. Their previous close was at $24.21, and they pulled back in the first couple of hours, and now they're kind of stabilizing right around $23. And that's about where they were trading 1 week ago as well, right around that mid $23 range, and they were climbing up closer to $24, and that was around March 7th to 8th. And then they actually spiked up to the mid $25 range, but now they've pulled back down, and they're somewhat forming a support line right around $23. Now, I don't think it's too concerning that Lucid is going to pull back too much more, because over the past month, the lowest price we've seen from Lucid is around that mid $22 range. So with them trading right around $23 right now, I don't think they're going to pull back too much more, if at all. But now I'm sure you guys are wondering why exactly Lucid is pulling back so much. And it's not due just to the world events that are happening right now, but there is something specific to just Lucid, and this is because the CEO, Peter Rawlinson, actually sold nearly 8 million shares of the company. Now, because this happened, it was actually creating a lot of fear, uncertainty, and doubt in the market around Lucid stock. And there's quite a few people pushing the fact that Peter Rawlinson doesn't believe in the company, but this isn't actually what's going on. Rawlinson actually filed the requisite Form 4 with the SEC yesterday, disclosing the cumulative disposal of 7.98 million shares of Lucid. But what people are failing to realize is that this liquidation was planned since July of 2021. But basically, to give you guys a quick overview of what's happening, Peter Rawlinson had to fulfill tax liabilities that incurred on the vesting of restricted stock units. So while a lot of people are misunderstanding what's going on here, you shouldn't confuse this with Peter Rawlinson abandoning the company. I think that's what too many people have misinterpreted about what's going on right now, but this was planned since July of 2021, like I mentioned. Now, on top of that, we are still seeing supply chain issues that are affecting Lucid, and in fact, Lucid actually cited this issue as a major stimulant behind lowering their 2022 delivery projections. Originally, they were planning to put out 20,000 units, but now they've actually lowered that between 12 and 14,000 units. But on a more positive note, they have recently announced while disclosing their fourth quarter earnings that the total reservations for the Lucid Air electric vehicle now stand at around 25,000 units. And if you do the math on this, it actually equates to a potential sales volume of over $2.4 billion. And in other words, this means that their entire 2022 production volume is actually already sold. So right now the problem for Lucid is being able to produce enough vehicles to deliver to these customers that have already made reservations. Now, I know a lot of you guys are probably either invested in Lucid or maybe you've even thought of buying into Lucid before, but I want to give you guys both the bear case as well as the bull case for Lucid right now, and maybe give you guys a different perspective on Lucid, and this can maybe help you decide whether you want to buy into the stock as well. Now, first up, for the bear case for Lucid, it's worth knowing that investors understand that Lucid has lost half their value in the first few months, and they still plan to spend $2 billion on capital expenditures this year as they fund factory expansions, as well as building showrooms and service centers. And as I just mentioned, they did plan to deliver 20,000 electric vehicles in 2022, but they just lowered that to 12 to 14,000. And then with the estimated 25,000 reservations representing $2.4 billion in potential revenue, if they hit this 2022 goal, and that is a pretty big if, then they would earn around half of that revenue, which would help offset operating expenses. But even if Lucid sees strong demand for their vehicles and they keep growing their production, it's likely that they're not going to see profitability for at least 3 to 5 years. And back in 2021, they actually blew through $750 million on R&D, and they also shelled out over $500 million in stock-based compensation. And then they finished the year of 2021 with $6.26 billion in cash on their balance sheet. But given the rate of spending that we've seen in the past, this cash may not even last them through the entirety of 2023. So Lucid's probably going to have to raise a lot more cash through capital markets, and they're looking a lot less attractive given the stock's lower price and rising interest rates in the bond market. On top of this, a lot of traditional auto manufacturers are actually investing heavily into EVs, along with several pure-play EV companies. So the competition is really heating up for Lucid right now, and while they may currently have one of the better vehicles on the market in terms of electric vehicles, this is a position they could easily lose in the coming years if they don't keep up with production numbers. Now, on the other side of the coin is the bull case for Lucid, and this would argue that they must ramp up spending so they can stay ahead of the competition. Demand right now for Lucid vehicles has already outpaced what they can produce, so the priority right now is on making cars and investing in new technology. Right now, they lead the market in terms of the longest range, as well as the highest voltage and the fastest charging EV on the market today. Their battery pack right now can charge 300 miles in just 22 minutes using DC fast charging, and the Dream Edition has a max range of 520 miles. And though we've seen slower than expected production from the Lucid Air, it's largely due to supply chain problems, and management believes they're going to begin to ease in the second half of the year, and the focus should be on the car and Lucid's technology more than anything else. And Lucid does have plenty of cash on their balance sheet to get through the lean years, and management remains confident in Lucid's ability to tap into capital markets as they need to. And by 2024, Lucid should be generating a sizable amount of revenue that's going to largely offset the costs and reduce the need for too many further capital raises. And Lucid's management team is very competent and they have plenty of experience at successful companies, especially the CEO who actually worked for Tesla, and he was one of the lead engineers for Tesla. So with everything I discussed here, I don't think Lucid should be ignored, and I think they have a lot of potential in the future. They have a lot of game-changing technology, as well as their extremely efficient battery pack and their integrated powertrain, which are all developed in-house. So Lucid is definitely a risky stock to be buying into right now, but with how much we've seen them pull back over the last few months, it definitely makes you wonder whether buying in right now is a good idea, or if taking a wait and see approach is a better idea. But the main thing I would tell you is if you're going to buy into Lucid stock, I would make sure that you diversify your portfolio and don't just put all your eggs in one basket. Because if Lucid has already pulled back this far, now I did say that they're right around the support levels that we've seen in the past, but that doesn't mean they couldn't continue dropping even more. And you guys know I'm not a financial advisor, but just make sure you guys do your own research and know what you guys are buying into. Now, if you guys made it this far into the video, I want to know what you guys think between Lucid and NIO stock and which stock you think is a better investment right now. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one. Bye.